So let's jump back into chapter 11 now. We're going to actually look at that worksheet now. Now remember, we have our chart of accounts, which lists all of the accounts that we're going to use in our company, and we'll add accounts to it as we need them. So this is just a list of all of our accounts. Remember, they're all numbered. This is what the list of accounts that Art's Wholesale Clothing Company has. And so we start off our worksheet with the trial balance. So we've listed all of the accounts that have a non-zero balance and what their balance is. And we've added them all up, and we're just making sure that debits equal credits. Now we're told that out of that rental income, that $200 of that has been earned now. So I'm going to do an adjusting entry to debit the unearned rent account and credit rental income to increase that revenue account. Now, we're also told that supplies on hand were $300 because $500 of supplies had been used. So if we look at our supplies T account, it had an $800 balance on it, and now we're told that the balance is $300. So that means we had to adjust the supplies account by $500. So I'm going to credit supplies for $500 and debit supplies expense for $500 to record that adjustment. Here I'm told insurance has expired, so I had previously debited prepaid insurance for $900 and now $300 of it has expired, so I'm going to credit prepaid insurance and debit insurance expense to update those accounts. And I need to depreciate my store equipment. So I'm told that depreciation expense is $50. So remember, I'm going to debit depreciation expense, credit accumulated depreciation for $50. Remember, accumulated depreciation is a contra asset. It has a normal credit balance. And then on the balance sheet, that will reduce our store equipment account. And here I have $600 of accrued salaries. These, remember, are salaries that my employees have earned, but I'm not going to pay them because it's not payday yet. So I'm going to debit salary expense and credit salaries payable to increase both of those accounts, increase both the expense and the liability account. So now we've got our adjustments posted in the adjustments column of the worksheet, and we've updated those account balances to in the adjusted trial balance columns. So these adjusted trial balance columns, these are the columns, remember, that we're going to use to prepare our financial statements. And as always, debits always have to equal credits, so that you'll notice that they do in both the adjustments column and in the adjusted trial balance columns. Now, the next thing we do is the income statement section that has our sales on it, our sales returns, sales returns and allowances, our sales discounts, those contra revenue accounts. It also has all of our expenses on it. Don't forget, we've also included rental income because that's a revenue account. And we've got our new expenses listed down here at the bottom. So we added up the debit columns, which are the expenses and the contra revenues. We add up the credit columns, which are the revenues, and we take the difference. That difference is net income, and we'll list it on the debit side just so everything totals. Now our balance sheet column is, again, everything not on the income statement. So it's all of our assets, all of our liabilities, it's all of our contra assets, it's got our capital and our withdrawal accounts in it. And then we're going to plug net income on the credit side of the balance sheet. Remember, we put it on the debit side and the net income columns. We're going to put it on the credit side of the balance sheet to make sure that the balance sheet, again, totals. And here's a picture of the whole thing all laid out. Now remember, these aren't our real financial statements here, but these are the practice financial statements, and then we'll go make the real pretty real financial statements.